Will Waitr Holdings be delisted? That's the question of the hour. I am going to go over it with you and discuss what could happen. I'm Jer. Welcome to my YouTube channel. Okay, so let's look real quick. Waitr Holdings. On the left here, up here, you'll see the revenue. They did 190.4 million in revenue. For the last year, they did 5.5-ish net income, so profit. Their market cap is 98.89 million, right around there, and they are currently trading at 0.52 times revenue. Now then, I've been asked, do I believe that Waitr Holdings will be delisted from the stock market? We're going to take a look. Let's look at this really quick here. Let me open this up. And we're going to take a look here on Investopedia. Okay. Delisting is a term describing the process of a company becoming removed from the exchange it trades on. A company's stock may be delisted as a result of failing to meet the exchange's laundry list of requirements. The listing criteria including maintaining trading price thresholds for certain time frames, minimum revenue standards, market capitalization standards, and shareholder percentage requirements. Companies in breach of the exchange's listing mandate initially sent non-compliance notifications, affording them certain windows of time to address these issues before they're ultimately delisted. Listing requirements vary from one exchange to the next. For example, on a New York Stock Exchange, which is where Waitr is listed, if a security price closed below $1 for 30 consecutive trading days, that exchange would initiate the delisting process. Furthermore, the major exchanges also impose requirements related to market capitalization, minimum shareholder equity, and revenue outputs. From a bookkeeping perspective, public companies must stay current with paying exchanges for annual listing fees due, while dutifully covering the significant legal and compliance costs associated with listing on an exchange. So this is the process. This is where you'd go to see delisted companies, tracking delisted companies. Okay, so they would have to trade under $1 consecutively for 30 days. Not 30, like 30 trading days, not 30 days calendar days. So 30 trading days. They would have to be under $1. Now then, and that just starts the delisting process. Now then, let's look. Trying to find here the process. That just starts the process. I know. Let's go back here. I feel like they have 6 months to fix it. I think it's 180 days. Let's Google it. Okay, so this is relisting. Okay, overview of delisting process. The company usually has 30 consecutive days to address the outstanding problems before receiving an official delisting notice. It feels like, and then they have, huh. So I think that it goes, oh, they receive a notice for being out of compliance. Warning comes with a deadline. I made so much money on Sears whenever they did this because it was like it was all over the place. So I'm not seeing the actual time frames. It feels like they have like some. I remember. Okay, so, if a company is in violation of continued listing standards for a period of 30 consecutive days, the NASDAQ sends a deficiency notice. The most common reason for deficiency notice are share prices that fall below $1, a market cap that falls below the stated minimum, as low as 5 million if other requirements are satisfied. Once a deficiency notice has been sent, the company has 90 days to comply with the continued listing standards. So then Waitr would have 90 days to get into getting the share above $1. And in order to be compliant, the company's share price or market cap must rise above the minimum for at least 10 consecutive days in a 90-day or 180-day period. So they have 180 days. And in that 180 days, they have to stay compliant, be above the $1 share price for 10 consecutive days. Okay, so, and if you were looking earlier on one of these, I don't remember which one it was, tabs, you could see that one of the chances to get relisted or to avoid being delisted, some companies will go or undergo a reverse stock split. Now, then, if you're already in the company, that's horrible news because what ends up happening is they do, like it says here, company executes a 1-for-10 reverse split. Then you end up, the company price ends up looking good on paper. But what ends up happening is a lot of times, like they'll do this 1-for-10 reverse split, and you'll go from having 1,000 shares to having 100 shares. The 100 shares will be trading at, like, let's say they're at 70 cents. They'll then be trading at $7, but then people tend to get out after that just because, like, it's just not like eventually it comes back off of that. Like it can make it, and I can see that actually happening with Waitr. I don't know that's the route that they would take. I feel like they're going to become more compliant again before that ever happens, but it might end up happening with their name change, and if they're struggling, like it would be a fresh start, a complete fresh start to do that. um, with their name change, then you have a stock price that looks decent, and you have a new name and a new mission that encompasses everything. So that could happen, and that if that happens, that's bad for current shareholders. Maybe not so bad for the future of the company or for future shareholders that got in around that same time after it kind of sells off some. I don't think it's going to delist, but you have to take into consideration that could happen. But I think what will end up happening is similar to what happened before, in that some big institution will buy a lot of shares and then announce it, like what Morgan Stanley did. And let's go back here. Announce it like Morgan Stanley did, and then you're going to see the share price just pop back up. And then you have to determine if you're going to be in Waitr long term as an investor, or if you're just like, okay, I made my money back, I'm getting out, I'm done. Or if you're just going to do like a lot of people that I have like talked to on like stock twits, there's a lot of people in there that play it. And I'm pretty sure they have two accounts. Like they'll have one account that's like, oh, Waiter's going to do amazing, blah, 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 to try to get it to push up, to try to get people to buy in. And then they have another account that they're like, oh, well, Waiter's crap, whatever. How is this thing still listed? Which brings sentiment down and pushes people out to sell. And then buy back in with that good sentiment of, oh, this is a great company. They're trading under, whatever. They're trading at 0.54 revenue multiple. This is great. So it all depends on what you want to do. Like I feel like the company has a great future, but I think it's going to take time. And I think that possibly before the next earnings call, you're going to see another institution, maybe even Morgan Stanley again, buy back in, hoping for like great news and to get some return on those investments that Waitr have been making, or ASAP has been making in the cannabis vertical and in the delivery verticals and in the payment processing verticals, and start to see a return on that. And so last earnings call, I said not to really expect anything. And people kind of took that and were like, oh, well, he's saying that earnings don't matter and revenue doesn't. I never said that. What I said was that you shouldn't expect anything great from a growth turnaround company right away. But I do think that now that time has passed, that you should kind of start to expect to see some returns from these investments that Waitr has been making into the future of their company and into building a better business moat to be better competitive beyond just delivery, which a lot of companies haven't been. Like you don't see DoorDash making a lot of strides to get beyond just delivery. And the thing is, people are returning to go to restaurants in person, go to sporting events, which is going to be great for Waitr if Waitr ASAP has continued to grow in stadium and arena delivery, food delivery. And then you're going to see the cannabis vertical grow as it becomes legal, hopefully on a federal level, becomes legal and becomes decriminalized. And then more states start to adopt that. I think we will see the cannabis business start to bring in more revenue, which will bring in more profits. So Waitr long term is great. Waitr short term, it's just hurry up and wait. It's just, you know what? I bought in. I'm just going to leave it. Maybe set a sell price for what you want to get out of it. And just leave it at that limit price. Once it hits that, it sells and you're done. You don't even have to worry about watching it every day. Or maybe you say, you know what, I'm going to cut my losses and go ahead and get out. This is like, I don't want to wait. This is taking too long, and be done with it. Like, so it's all up to you, obviously. I can't hit the buy button for you, and I can't hit the sell button for you. I'm not going to tell you whenever I buy more, and I'm not going to tell you when I sell. It just is not like Well, I might tell you when I buy more, but I'm not going to tell you when I sell, because that just ends up being bad for the whole thing. Like, that's just not good. So, my opinion is, do what you feel is right. Whatever your gut is telling you, follow that. If you think that an institution's about to get in or make an announcement that they got in, then maybe add to it. If you feel like, you know what, I trust that Waitr long term is going to be great, I'm just going to set a limit price, be done with it, then great, do that. But just know that there are risks. There's risk in any stocks. There is a risk of Waitr being. Someone asked me, and that's why I'm doing this video. There is a risk of Waitr being delisted. Yes. Do I think it'll happen? I don't. Like, I don't think they're going to let that happen. It's possible though. Is there a chance of a reverse split? Yes, there's a chance of a reverse split. That's something you have to take into consideration too. A lot of companies do reverse splits to be able to stay compliant. Does that feel fair? No. And it's almost like an offering, but it's something that you have to kind of be prepared for to happen. It could benefit the company in the long run, but it's another hurdle. So I don't know. I just feel like you just need to kind of take into consideration the risks, realize that they will probably start to see some returns on these investments slowly but surely. And I think by the end of 2022, they should be in a really great place if they haven't been bought out by that point. So just hold on or don't. Up to you. My opinion is that they won't be delisted. I don't think they'll let that happen. I think that they would do a reverse split before then, but I don't think they'll even get to the point of doing a reverse split. Just my opinion. Okay, that's all I have. I love you all so much, and I will see you very soon. If you haven't yet, be sure to subscribe. Okay, I love you. Bye. Mwah.